Hi, this is Kerry Artek with Wicked Stocks, bringing you a YouTube video analysis on the NASDAQ-100. This is big picture analysis. I did record this the week of July 5th, 2022. We can jump into the charts. This is actually kind of an update if you've been watching, but we've got a lot of videos that we're doing on wickedstocks.com, including the daily Triple Q report, which is the ETF equivalent to the NASDAQ 100. So everything you see here, by the way, all the line studies you see here, we start from here with regard to the Triple Q analysis, and then we fine tune it on daily charts and other more intermediate formations that are not shown here. So it's a more precise, precise is not the right word, it's a more detailed analysis, a 5 to 10 minute video series every single day. The daily Triple Q is only $25 a month. So everything that you see here, you can also get in the form of a daily video series on wickedstocks.com. So rising 2/3 speed line. I'm not showing how they're constructed. It's not as if I want to be coy or evasive about that. It's just that we only have so much time, and this is not so much instructional as it is informative. So informing you that a rising trend-defining 2/3 speed line projected off that March 2020 COVID low is this week at 11,337.20, rising exactly 38.37 a week for the week of Tuesday, July 5th. Now you can monitor the existence of this speed line through time, all the way through the third quarter if you like. It is a base of support that's been holding nicely, as you can see, and above which I can make a point or the case that we are carving out, if you will, a third quarter low, or perhaps a good low through the rest of the year. And from here we can recover nicely. I'm going to show you you can actually see in this image the fact that we did dip below it about a month ago, but we did not close below it at the end of that week. And so that is really the critical element. If we were to have closed below it at the end of that week, or any week actually, and it needs to be by a 1% margin for long-term line studies, 1% is really a requirement. It is a bit of an arbitrary number, but it works well. So for instance, this week, 11,337.2. If we settle at 11,300, that would be inside the 1% zone, and that would not be considered a reliable, actionable sell signal. It would still be considered a mere testing of long-term support. Not until we close below that line study by a 1% margin do I see an indication for bearish continuation. And so there's that. Now, in terms of resistance that's coming down, you can also create descending speed lines. Now, I use channel formations, as you've probably seen before. If you've tuned in to Wicked Stocks YouTube channel, you know that we're big on channel formations. But in terms of a trend identification right now, really the only thing left on this chart in terms of long-term support over the last few months has been this rising 2/3 speed line that this week is at 11,337.2. There's a descending 1/3 speed line and a descending 2/3 speed line. They're trend defining. So our next meaningful mid-term resistance is presently at 12,549.31. And I consider this to be a 2 to 3 week target. Holding above 11,337.2, we should, over the next several weeks, quite possibly by the end of July, reach that 12,549.31 descending 1/3 speed line. I can describe how that's created. It's pretty simple math, actually. You take that high from last November, the all-time high on this chart, against the recent low, which is about a month ago, and 1/3 of the way back up from there is the 1/3 pullback. And you draw a trend line projected off that November high, coming down, and it intersects at the 1/3 pullback point in the time frame in which the low was made. And so it is a dynamic approach to trend identification. So for instance, if we were to break and form a new low, we would need to recreate the new speed line. So the descending 1/3 speed line, basically what that says is from the high of last November, this market remains sort of on its heels, on the defensive, below 12,549.31. Yet, the 2-year time frame, projected off that March 2020 low, maintains a stable dynamic above 11,337.2. So we've got sort of counter currents right now. We've got more of a near to midterm that remains heavy below 12,549.31. And then we have a long term at 11,337.2 that says, not so fast, we may well be forming a long-term low that's good through the year. And if we were to close above 12,549.31 or that speed line at the end of any week, then we actually, in my opinion, have seen a good annual low. And we should then see several months bullish continuation. You can see here that the 1/3 speed line, 12,549.31, that if we close above it, then I have an objective of the 2/3 descending speed line. And it's constructed the same exact way. You take the November high against the recent low from 4 weeks ago, and the 2/3 upside retracement. You draw a trend line off that November high and intersects at the 2/3 retracement in the time frame in which that low was made a month ago. And so with regard to speed line analysis, when you settle above a descending 1/3 speed line, your objective becomes the descending 2/3 speed line. And if we were to close above the descending 2/3 speed line, in other words, that 14,653.92 line study, if we were to close above it, then the objective becomes the high itself, the November high from last year. And that's just sort of the way, I'm just sort of describing how you use speed line analysis. But getting back to the basics here, 11,337.2, bottom picking territory for the week, for the month, for the quarter, and even perhaps through the rest of the year. The rest of the year confirmed, really, if we were to close above 12,549.31, that descending 1/3 speed line, dropping 131.73 a week. And if we close above it, then we've got a good buy signal that should play out over the following 3 to 5 months or less, up to 14,653.92. So in other words, closing above 12,549.31, dropping 131.73 a week. If we were to settle above it, we have a good annual low, in my opinion, and we should then follow through over the following 3 to 5 months up to the 14,653.92 speed line. Lots of numbers to throw at you. Let's take a look at the downside. The what if we close below 11,337.2 this week, that long-term speed line, and that does need to be by a 1% margin. So a 1% violation this week of 11,337.2 would be 11,223.83. So if we close Friday, that would be Friday, July, 9th? Oh gosh, let's see here. Friday, July 8th. The 6th, 7th, 8th. Yes, sorry about that. If we settle this week, the week of Tuesday, July 5th, I think it would be Friday, July 8th, at 11,223.83 or lower. In other words, a 1% violation of this line study. Well, I'll tell you right now that it would not necessarily indicate longer-term bearish continuation, but only near-term bearish continuation. This is the same speed line projected off that significant March 2020 COVID low at 11,337.2. And if we settle below it by the 1% margin, we merely fall another week or two to the sort of, we've got two significant Fibonacci retracement levels right now that cannot be ignored. And that is 10,664.47. That is a 3/8 downside from A, which is the 2002 post-dot-com bubble low against the recent high of November of 21, B. So 3/8 back is 10,664, and 5/8 back from CB, the March 2020 COVID low against that recent November high, is 10,589.22. And so that area becomes a quick objective if we were to close below the 11,337.2 rising 2/3 speed line. The 10,589 to 664 area also able to contain quarterly, possibly annual selling pressures. And if we were to close below 10,589.22 at the end of any week, then what you see here, which I call the church steeple rally, we've got this sort of symmetrical descent that is at the same angle almost as the 2-year rally or the 1.5 year rally from C to B. And those often complete themselves. I'm not saying it's inevitable right now. I don't think that's necessarily true. But if we close below 10,589.22, then yes, we drop all the way back to see the March 2020 low, and then that church steeple rally, that hyperbolic rally that occurred from March 2020 completes itself all the way back. I'm not expecting it, only if we close below 10,589.22 at the end of any week. So the way I frame this, and the way I'm framing it for my daily Triple Q report subscribers, that 5 to 10 minute video I put out every day on the popular NASDAQ-100 ETF, is that we are stable to bullish now, above 11,337.2. I gave you the buy signal a moment ago. You can scroll back and see that it would be a settlement above that descending 1/3 speed line. That would be the sort of the peel away factor to the upside, whereby we really don't look back and we continue on up into later year. So we are stable to bullish above 11,337.2, and we really don't turn bearish into later year unless we close below 10,589.22. And any trade inside that below 11,337 and above 10,589.22 is, in my opinion, sort of a no man's land of trend identification, at least as it pertains to the big picture in terms of through the rest of the year. I think that pretty much covers it. Yeah, I think that summarizes it pretty well. That's really all I have to say for this week's update on the NASDAQ 100. Don't forget wickedstocks.com. You can click through. You can check out the daily Triple Q report for $25 a month. Try it for a month. You may like it. It may help you with regard to your options trades on the NASDAQ 100 or the Triple Q, or they actually trade in the Triple Q itself. And that's really all I've got for this particular video analysis from wickedstocks.com. You have a great day.